Today I have some big news about the ETF SCHD. If you hold this ETF or you follow it, you may have heard recently that it's going through a 3-for-1 stock split. But what does this mean for you as an investor? Will it affect your dividends and your total returns? In today's video, we're going to break down SCHD and let you learn everything you need to know about it, including its top holdings, its performance, and the 3-for-1 stock split. So grab a chair and let's dive in. My name's Darren, this is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners because let's face it, there's nothing that gets you ready for that first day of your investing journey, and I do it by sharing my journey with all the ups and downs along the way. So follow me along on my journey and we'll get you started on yours. All right, let's jump over into my portfolio, examine how it's performing, buy some stocks, and see the dividends that we earned since the last video that I posted. All right, so with the account sitting at $153,997, my account consists of 4 separate accounts: my cash account, my kids' RESP, my RRSP, and the star of my show, the TFSA. I started this channel so you could watch me build it from zero to maxing it out. The cash account currently holds $21,638. It's earned $20.84 in interest this month, and it is currently earning 4.25% interest, but of course the Bank of Canada is slashing rates, so we'll probably see that drop some more. Why do I show you? Because it's an emergency fund. You have to establish one before you start investing. So if you're a beginner just starting out, you make sure that you establish an emergency fund. All right, let's jump over into my kids' RESP. Now, if you have kids and you want to start investing, I did start a video series on that, so check it out. The account's sitting at $73,124. By the time they're ready for school, they'll have $416,000. Now, this account is a robo account, and I do pay a small fee for it, but I think it's worth it in the end. All right, let's jump down and look at the asset allocation in this account. All right, so the asset allocation is broken up through various assets, including U.S. equities. So we're invested in QUU, you can see here. We have international equities, emerging markets, and of course, Canadian equities. Now, Canadian equities only makes out 11% of the entire portfolio, but when you think about it, Canada only makes up a small portion of the entire investing world. We also have global equities, government bonds, and some gold. The gold is GLDM. You can look at ETF if you're interested in it. We have $1,931 invested in it, but what's important is the performance at 40%. Net deposits in this account, $59,859, returns $13,265, and the total simple returns is 22.16%. When my wife and I had kids, we set up an RESP, believing that matching government grants would be the way to get that money ready for our kids later in life. Little did we know that you could invest this money, and of course that's one of the other reasons I started my channel. So make sure you check out my RESP videos if you're interested in investing for your kids. This account has been very fruitful since we started investing in it, and of course I regret not having done that for many years, but we're into it now and we're growing that money. Into the activity tracker, we can see we had a $100 reoccurring investment for my daughter and $100 for my son. That's matched by the government with the government grants, so make sure you take advantage of that. We had a dividend from ZEA. We also had a dividend from ZFL. And of course, now that's on DRIP, so it's reinvested back in. So we can see here QUU, we had an investment with the invested money, ZEA, as well as ZFL. That would be the reinvestment from the dividend. And then just as of today, when I'm filming this, we had our regular reoccurring investment. So as of tomorrow, which will be in the next video, we'll see where that money got invested. All right, jumping over into my RRSP. Currently sitting at $18,404. On the day, we're up $88. Over the last week, we're up $241. Over the last month, we're up $1,047. Over the last 3 months, we're up $1,062. And over the last year, we're up $3,818. And all time, we're up $3,208. As you can see here, we only have 11 cents in the account. If you're new and you're following me for the first time, I don't invest in this account. Again, we're maxing that TFSA out. We're taking advantage of that TFSA to grow our money tax-free, and we're going to build these RRSPs up later. So here's an overview of the different securities that are within my RRSP. And of course, it is diversified now. When I first started, it was really focused on Canadian securities, and now it's focused on diversity with some American securities, as well as some Canadian stuff. And of course, it's diversified. So if you want to check that out, you can pause and have a look at each security. We have ETFs, covered calls, and REITs. All right, looking at the performance using Passive. Passive is a great tool for you to check everything out in one place. Link is in the description for a savings, so check that out. We can see we didn't invest any money, so no net contributions. We can see here the total value is just slowly growing, of course, that represented by the green line. Net change in the account, this is just for the last 2 weeks, and that is $497 with a rated return of 0.01%. And then we can see that we have a dividend history. Within that October of that 2 weeks, we've earned $98 in dividends. And of course, in September, in the latter part from the 25th on, we earned $47 in dividends. The average monthly dividends in this account, $311, and we can see no commissions or fees because we're using Wealth Simple. Link is in the description if you want to get started. All right, the estimated savings is 0 because we don't get charged anything, and the total dividends on this account to date for the month, last 2 weeks, is $145. All right, looking at the all-time returns on this account, we can see that the net contributions are $12,745. And you can see here by the blue line that there's, like I said, no contributions, but a steady increase in that green line. Net change, $18,549. The rate of return, all-time returns, 29.17%. Investment growth, $5,804. Here's the breakdown on the bar graph of all the various dividends you can see. And you can go through each month if you want to go through and see which securities paid out how much. Now they are rounded, they're not specific to the cent, they're rounded up or down depending on how much you earned. Average monthly dividends in the account, $101. Again, we're using Wealth Simple, so no fees or commissions. Here's the dividends in a bar graph. We can see QQQY is paying out the most, so the covered calls are paying out the most. Now, this particular fund has been a problem for me, and I'm seriously thinking about getting rid of it. Check this video out here. Total dividend returns in the account are $1,902. Jumping over to the TFSA, the start of the show on the day, we're up $96.30. Over the last week, we're up $278.25. Over the last month, we're up $2,281.23. And over the last 3 months, up $2,372. And over the last year, we're up $6,117. All-time returns on the account, $5,859. That's 16%. Pretty happy about that. So we can see we only have 1 cent sitting in the account, but of course we're going to put in that $1,000 that we put in every 2 weeks. Consistency is the most important thing. Time in the market is better than timing it. So today we're going to drop in that $1,000 once we go over some of the metrics, and we're going to buy the stocks and ETFs that we're going to do this bi-weekly buy. Stock lending is on. I've earned $2.17 in there. The next payday is October the 15th, so right around the corner. And you can see here we have Plaza REIT is on loan with 37 shares. So as of the 15th, we'll earn some more money. Here's an overview of each of the securities within the account. And you can see here at the top, we have BAM, and right after that is CNR. CNR was recently added to my TFSA. Check this video out right here so you can see the reasons behind that. Of course, we have HYLD, which is a covered call, Plaza REIT, and QQC, which follows the NASDAQ 100. It's been performing pretty well over the last year. And of course, we have REI, TELUS, TD, VFV, and VRE. VRE is an ETF that holds a lot of different REITs. So if you want broad exposure to some of the REITs, that's a great ETF to hold. And of course, VFV is the S&P 500. Now we're into the diversified ETFs in the international markets with XEF and XEC. And of course, we have our high yield dividend ETF XEI. All right, so we're going to use Passive to check out the last couple of weeks since the last video. We can see here that we had our net contributions, which are represented in the bar graph, which totaled $2,025 since the last video. Of course, you always have the bar graphs, which is nice. I'm a visual guy. I like to see things grow. The net change in the account, $2,954 with a rate of return of 1.49%. Remember, that's only over the last 2 weeks. Investment growth, $929. Here's the dividend history. Average monthly dividends right now is $281. No fees or commissions. Again, we're using Wealth Simple. Here is the estimated savings, 0, because we don't get charged any fees. And the dividend income for the last 2 weeks was $131. Now let's look at the all-time returns on the account. So net contribution sitting at $25,846. Of course, we can see the steady increase, time in the market better than time in the market, as said before. Net change, $32,420. If you're wondering about the disparity between the contributions and the net change, it's simply because Passive has a glitch and it doesn't recognize any of my transfers from my cash account to my TFSA. So to get around that, right now I'm moving money from my bank account so that it registers it and will show it. It'll be a bit more precise as we move along. We have a rate of return of 14.33% in total over all-time returns, and our investment growth is $6,724. We can see here the bar graph showing a steady increase in our dividends as we move along, and that will continue to grow. The average monthly dividends in this account, $60. And of course, no fees or commissions. A nice bar graph to show us which are paying out the most in dividends, and the total dividends in the account, $1,106. All right, so we've dropped our $1,000 into the account, so we're ready to invest. Now, normally we use Passive to help us make our decisions. It has the ability to look at the amount of money you have and decide for you what you're going to buy. But I took opportunity to analyze it myself. All right, so we're 95% accurate with a total value of $40,743. But I noticed that our accuracy with VFV is quite a bit off, and with XEF, and I want to bring that up. So in today's video, we're going to mostly invest into those two ETFs. All right, so as usual, the first thing we're going to buy is VFV, and we're going to buy 5 shares of VFV. That'll help bring our asset allocation percentage a little bit closer to that 100% mark. And the next thing we're going to buy is XEF, and we're going to buy 7 shares of XEF, giving us that international exposure to Asia and Australia. With $22 left over, I'm going to add a little bit more to the account because I want to add at least 1 more share of Ryokan. I was going to buy 1, but we're going to buy 2. So here we're going to buy 1 share of REI. Then I'm going to add a little bit more money so we could buy 1 more share of REI. All right, there, so we bought that extra share of REI. We have a little bit of money left over, totaling $8.58. Perfect for Plaza REIT. It's a very cheap REIT, Canadian REIT. We're gonna buy 2 shares, and the remaining 90 some odd cents that's left, we're gonna buy a fractional share of Plaza REIT. So that sums up all our buys for the week. We're now sitting at $41,800 roughly in the account. Today we're diving deep into the fan favorite in the world of ETFs, SCHD, also known as Schwab US Dividend Equity ETF. If you're looking for a solid dividend income, long-term growth, and low expense ratio, this ETF might just be perfect fit for your portfolio. So what exactly is SCHD? Well, launched by Charles Schwab in 2011, SCHD is designed to track the performance of the Dow Jones US Dividend 100 Index. This index focuses on the 100 high-quality US companies that pay consistent and growing dividends. SCHD aims to provide investors with a mix of strong dividend yield and long-term capital appreciation. But what makes SCHD stand out compared to other ETFs? First off, SCHD focuses on high-quality companies. It doesn't just look for any company paying a dividend. It screens for companies with a strong record of dividends growth, profitability, and overall financial health. This is important because it helps avoid so-called dividend traps. Companies that pay high dividends but are at risk of cutting them due to financial troubles. And of course, everybody knows that one of those stocks here in Canada is Enbridge. SCHD currently yields around 3.74%, but what really sets it apart is its dividend growth rate. Over the past few years, SCHD has delivered impressive dividends, increasing, making it attractive for long-term investors who want their income to grow over time. Now let's talk about the top holdings of SCHD, some of which will need absolutely no introduction. These are current as of October the 10th, 2024, while I'm filming today. Home Depot takes the top spot at 4.45% of the entire portfolio. This is followed by BlackRock, one of the world's leading providers of investment, advisory, and risk management. And you may know them for their popular ETF XEI, which I hold in my portfolio. Followed by Cisco Systems, Verizon, Pfizer, Bristol Myers, Chevron, which is also held by the world-famous investor Warren Buffett, Lockheed Martin, Texas Instruments, and Aviva, which is a pharmaceutical development company. Let's move on to performance. Over the past 5 years, SCHD has outperformed many of the other dividend ETFs with an average annual return of 14.10%. This performance is even more impressive when you consider that it comes with a super low expense ratio of just 0.06%. That's right, only 6 cents per $100 invested, making it one of the cheapest dividend ETFs out there. All right, let's quickly summarize the pros and cons. The pros: high dividend yield combined with strong growth at 3.74%. It has a low expense ratio at 0.06%, which keeps more money in your pocket. And number 3 is it focuses on quality companies with financial strength. Cons: while it's diversified across sectors, it is somewhat concentrated in its top holdings. Primarily, also, it is focused within the United States, which could be a downside if you're looking for global exposure. So how does SCHD stack up against other popular dividend ETFs like Vanguard's VYM or iShares HDV? While VYM and HDV also focus on dividend-paying stocks, SCHD has historically had stronger dividend growth and, in many cases, better total returns. Plus, with its low fees, SCHD continues to attract investors looking for both income and growth. It's important to mention that SCHD isn't just for retirees or income investors. With its growth potential and strong dividend reinvestment opportunity, this ETF can work well for young investors looking to compound their wealth over time. Now let's talk about the stock split. That's right, SCHD is splitting its stock 3-for-1. But what exactly does that mean? Let's break it down. In simple terms, a stock split means that we're dividing each of our existing shares into multiple shares. In this case, 3 shares for every 1 you currently hold. So if you own 10 shares of SCHD, after the split, you'll own 30 shares. Easy math, right? But here's the important part. While the number of shares increases, the value of your total investment doesn't change. For example, if 1 share was trading at $90 before the split, it will now only be worth $30 after the split. But you'll have 3 times as many shares. So, why is SCHD doing this? Well, the stock price has been rising, and they want to make their shares more affordable and accessible to a wide range of investors. The 3-for-1 stock split lowers the price for each share, making it easier for new investors to buy in, while current shareholders still hold the same overall value. Now mark your calendar, here are some important dates you'll want to know. It's October the 10th, 2024, which is today, the day that I'm filming. If you own SCHD, your shares are going to multiply in your brokerage account. When you wake up tomorrow, you'll have 3 times as many shares. The 3-for-1 split will help even more people join the SCHD community and enjoy the benefits of long-term investing. All right, that's the scoop on SCHD and its 3-for-1 stock split. It's an exciting time, and it will be more affordable, in particular for those of you who use brokerage accounts that don't allow fractional buys. If you have any comments, please feel free to leave them in the comments section below and generate some conversation. Hey folks, thanks very much for watching. Thanks to those 907 subscribers who have taken the time to hit it. It only takes a second to hit the subscribe, and it really helps my channel out. Hit the like and share. If you want to follow me live, you should jump over to Blossom Social, an amazing social media app designed just for investing. They have lots of great stuff over there, and if you want to check out what it's all about, I did a video on it, so check it out right here.